All right, folks, welcome to a higher time frame DXY and EURUSD draw on liquidity outlook. This is an important update on a draw on liquidity. Since I was been wrong, you can see market is going against my position. That means I'm wrong. And this is an update on the draw on liquidity because I was wrong. Now we're updating it. All right. And also it's a trade breakdown. It's a quick little trade breakdown that I took a short on Monday. And it was a quick loss. Like the trade lasted. Well, let me see how long the trade lasted. 1 minute, 2 minutes. Right, in 2 minutes, I took a loss, which is to be expected if you're wrong, right? Because when you enter the 1 minute time frame, the market don't really give a fuck about your fucking entry model. So it's good for you to get stop losses very thoroughly quick. Because if I put my stop loss here or even as high, I'm still regardless gonna take a loss, right? So there's no difference between me putting my stop loss here and here. So that's why I like the 1 minute entry models, right? And they work. I've showed you guys proof before they're working. And it's not even about that. It's about the emotion you feel in that trade. This trade, I took a trade in 2 minutes. Your psychology, your emotions aren't as you could say, aren't as active, right? They're not active. You're not gonna, because if you're in a trade, let's say from here to you put your stop loss here, throughout the trade you're feeling hella emotions because like when a trade is going against your position, the longer and the wider stops you have, the more emotion you're gonna feel. So in this trade I didn't feel that emotions because I took a loss in less than 2 minutes. My stop was right up here. And yeah, my hard time from box was wrong, right? And we're going to talk about that. We'll talk about the loss here or trade recap also. But let's start from the loss trade recap before we go to the higher time and draw liquidity outlook, the update. So make sure you guys watch that because that's very important, right? It is also, this video going to go over the lessons from this trade. So let's go over it, right? I was looking to take a trade on the daily order block, and eventually on Monday he got tapped, and also we had a daily range. So there's two mistakes that we're going to talk about here, right? Mistake number one, which is to take the order block, and our next mistake number two, our box was wrong, right? Mistake number three was that that the daily range was there, present. And the 4 hour time frame, we go, that's a daily movement, right? And the 4 hour time for the 4 CRT was our lower time frame range. 15-minute time frame, we had a 15-minute order fair value gap above an old high, which got tapped, and the 1 minute time frame, you can see I'll show you 1 minute time frame. We took a 1 minute fair value gap, 1 minute order block entry. I usually tend to enter the order block or fair value or breaker in a 1 minute time frame, but if I miss the order block, I'll enter the breaker. That's how I enter my 1 minute time frame entry models. Otherwise, I don't look for any other entry models on the 1 minute time frame because it's so tricky. And I always try to take the best breaker because the breaker in 1 minute time frame is very tricky, right? I'll try to take the best breaker, which is the closest one to the market price, and the one that got created the most recently. And that's the trade. What was the lesson from the trade? The lesson for the trade is very clear here. Is that our box is wrong. Number one. Number two is that daily range, right? Daily range is here. So this is a very important lesson on daily ranges, right? Because daily ranges, in this case, this daily range didn't even look like it's gonna work out, because it looked like if this were to go downwards to the downside, this daily range literally does not make sense, because it makes sense to go back to the 50% mark, but it doesn't make sense to go over here because it has to go over here before going downwards, right? Why? Because of the important key level in the daily range. And the important key level in the daily range always gets met, right? It doesn't make sense for it to do that, to go all the way back up here before going downward, right? You should just continue from here, but it's not going to continue because we're going to go up higher, take out that high. And that's the main thing about daily ranges. And this one confused the hell out of me, right? I was like, will this daily range get retraced to or not? In this case, this daily range did get retraced to, and we took a loss before that. So we took the candle tap the daily range, right? Which we should never do that, because why? Because the candle tap the daily range needs to close, then you trade the next candle, right? That's the lesson. So the lesson of the trade is pretty clear. Lesson number one, our boss is wrong. we check our buys. This is why I love taking a daily level trades only. If I were to take a 4-hour level, I can take a lot of trades quickly. I could take a trade like possibly every 2 days, right? I could take a trade, but I don't know when my bias is wrong in a 4-hour level. But a daily level, if I take a loss, I know I'm wrong. I know, okay, I should be longs. And sometimes I will be wrong where in a case where the bias or the drawn locator will be bullish, right? Or bearish. And I'll take a premature long or short. And eventually I have to take another trade. But that never happens. It should never happen, right? Because is a very easy rule to go around with, because my lower time frame entry models are much are clear, right? They're not nothing that is gonna be execution no problem, right? It's just primarily the higher time frame at the moment. And yeah, that's the lesson, right? So lesson number one is whenever the market seems at a higher or low and it's a daily range there, no matter how weird it looks, the market is in a daily range, is in a premium or discount, and will retrace to the equilibrium of the daily range, right? That's number one. Because in this case, I thought he was not going to retrace to the equilibrium, which is fucking stupid. Why is it stupid? Because it's a daily range, right? It didn't make sense for me for it to retrace, which it did right now. It doesn't make sense for me at the beginning, because I was like, man, you shouldn't be doing that. Overall, it doesn't really make sense to do that, because you're gonna go up higher. Um, but at the end of the day, it's still regardlessly shipped at a high and a low. So there's range present. So the market is gonna retrace, right? So that's a number two. Now that's the overall lesson for this trade. Nothing else. The next lesson could be getting the right bias, right? Which we're gonna talk about right here. That's why I said I love to take daily levels and above. But let's go to the neutron liquidity outlook. So going to the 2-minute time frame, we did meet. Let's go to DXY. DXY is much better than EURUSD, right? On predicting the market. So if you go to 6-month time frame, we still have the 6-month low as a CRT. We still have the 6-month as a CRT, right? CRT high is first. We'll go down to the CRT low. Now, why do I pick this one specifically? Because if you go down to the 12-month, we do have a 12-month CRT downside, right? Now, if you go to 6-month, again, that's what we have. But you can see last quarter market did go up higher, right? And that was, I think, it was on a monthly time frame when it went up higher. Yeah, the monthly time frame, yeah, you can see it went up higher, but that's because of short-term trading, right? The only time we use a 3-month. The only time we use a 6-month or 12-month is when after the quarterly target is met. It's got a quarterly target already got met. So now market may be an expansion of market condition, because market is not always gonna go super at the range low, go back up high, super the range high, go back down low, super the range low, go back to high, super the range high, right? It simply doesn't make sense, because market needs to eventually move to the direction where it's intended to go, right? So that's why it doesn't really make sense for the market to keep on doing that. And eventually the movement to the higher different drawn look at like 6-month or 12-month time frame will happen at new highs, right? If the old here did not deliver. So as we have on the higher time frame, go down to the monthly. We do have no monthly series downside, but we're looking for continuation. But we do have a monthly key level, a monthly order block as our key level. So there's a monthly, or as you guys know, order blocks, they never get left out. And his order blocks will give you trade too, which he did right here. Eventually looking to expand from his order block to the downside. Because as you guys know, after that, usually I think this is what I see happening, right? After the market meets a 3-month or monthly range higher or low, market will create an order block and tap the order block and go down lower or higher from there on forward, right? Go down to the weekly time frame. What we have in a weekly, we do have a weekly CRT high that got burst recently. With that, we also have a weekly fair value to the downside, if you could pay attention to it, right? There's a better liquidity. Give you 1 second to do the drawings. Going down to the daily time frame. What do we have in the daily time frame? We right now at the moment we don't have any daily retracements, right? We don't have any daily CRT to play around with, but we do have a order block that market wants to will highly likely retrace to. And with this order block, we do support the high, support the low. We can definitely make a daily range here. So retracement is bound to happen potentially next week or this week, right? Today's gonna be like on New York session today. High likely might be some sort of high impact neutrals NFP, right? So you can also, if you pay attention here, there's the order block can be this and this, right? It can be multiple things and if you go down to the weekly time frame, the order block in the weekly time frame was this, right? The wick. But if you go to the dollar, the order block was the body. Wait, was it? It's not a dollar. The order blocks are the body, right? So that's why our order block can also be this, right? Our order block can also be this right here, because order blocks can definitely have 2 consecutive candles or multiple. So let's not make it complicated and just do that. In this case, that's our order block right there. If it gets tapped, then cool, we can take it short. And that's what we have for the daily. Down to the 4-hour time frame for market profiling. What do we have for market profiling here? We do have a bearish market trend, so we can definitely go up, super the old highs, tap the high key level, and go down lower. But as I said before, in a daily range, whenever there's an order block in a daily range, we can trade right after the market tap the order block. We don't have to wait for the candle to close that tap the equilibrium daily range, because whenever that's only when it's the order block. Otherwise, we'd have to wait for the order block. Well, we have to wait for the candle to tap the equilibrium to close. Otherwise, I mean that's the only situation. And I apologize for me being rusty at the moment. You can see the way I'm stuttering and making a lot of ums or uhs because I'm rusty, right? Inshallah, we get better. So same thing to the 12-month time frame. Same thing to the 6-month time frame here on the dollar, on the on the Euro USD. The 6-month for this would be this, which already got met, as you guys know, as you can see, it's already got met. But to better it out, you have to go to the 12-month. The 12-month also already got met. There's SMT here, but the dollar has its own goals, right? So if you go down to the 3-month time frame, market does still want to stand in a short-term basis until the dollar meets a drawn liquidity. Daily monthly time frame got much. We do have something here. I don't mean we don't have much. We have a monthly order block. How is a monthly order block? It had SMT with its low, so it basically pushed it out. Go down to the weekly time frame. Okay. We do have a weekly CRT here to the upside, and a weekly fair value gap supporting that CRT. I'm getting a little emotional for some reason, and may God protect me from anger. I mean, that's the weekly order block right there. And on a daily time frame, this support a low to the high. We have a stable low and a stable high. Market definitely retrace, and our order block, as I said before, in this case, there's 2 consecutive candles. Our order blocks are this right here. So we can trade after the order block is tapped. In this case, the only thing we have in this dealer range is the order block, right? We don't have no important key level, so that's all we got to worry about. And we also have a bigger dealer range here, right? We do have a bigger dealer range, you could say, over here. So the low with a high, right? Made a stable low. We haven't made a stable high yet, so market constantly made a stable high over here. You could count this as a stable high, and market did do a big retracement, right? Same thing on the Euro on the dollar, right? Slipped out of high, slipped out of low, made a stable low here, but no market never retraced, so we're still looking for the same good old action. And that's what we have for the dollar. And is there anything else? That's all. we have, and there's a new drawn liquidity, also trade loss trade breakdown. So people who watch this video to the end, congrats, you get the new bias, you know the market's going. If you didn't, cool. Ain't got much to say, but yeah, thank you for watching. Make sure you guys like, comment, subscribe, share. So on Telegram, so down below, and I'll see you guys inside Telegram. Peace out.